Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals. Let's talk about gold, which is not dead yet, up about 0.25% today in that 1221 area. We now have two consecutive up sessions for gold, and if you look at the weekly chart, that if we finish the week up, and today got us to almost unchanged, so we're not up yet. But if we were to get a continued rally in gold and finish the week up, that would be 3 of the last 4 weeks higher. Not much. I mean, it's certainly not something to get excited about, but it's a little bit of sideways action. Gold has not been able to distance itself from the 1200 level, but it also has not been able to break it, has not been able to get back down below it and keep a sustained move below it. It hasn't gotten below it at all for quite some time. Still in a definite bearish pattern, bearish trend, I should say, but it is not really moving off of that 1200 level in either direction. However, gold is very unloved when you look at the overall pattern and the overall fundamentals. Institutions and even gold bugs are having trouble finding reasons, convincing reasons to hold gold. Owning gold is one thing, but to continue to add to it and to hold it, looking for that up move, is becoming very difficult to argue. Yes, there are people that put it as a core part of their portfolio, and that's that. But when you look at the overall geopolitical situation, there's no real imminent military threats. We have a trade war, but not any threat of a major actual war. There's little skirmishes here and there. But the Yemeni rebel thing is about the most exciting thing from a perspective of actual military events that could spike gold, and hasn't really been able to do so with any of the action there. Obviously, the Middle East can flare up. Tensions between Korea and the U.S. have fallen. Tensions between China and the U.S. are strictly trade-based. And then Russia and the U.S. obviously not going anywhere. So there's no real military threats. Now, currency threats, other than Venezuela and possibly Brazil, which seems to be calming down, no real currency threats either. The Venezuelan situation has been around for quite a long time. And then in terms of governments, again, it's only really Venezuela that's any sort of threat, which is not enough to rally gold up. And that's all gold has really been valuable for in the short term, was these types of sort of event-driven spikes. And there just hasn't been anything. Gold remains unloved based off of that. And then it's been basically dollar denominated. Now, I don't mean that it's denominated in dollars. I mean it's dollar dominated, not denominated. And what I mean by that is the inverse relationship between gold and the US dollar is likely to take hold because nothing else is. Now, the dollar has fallen the last 2 days with gold's 2 up days, and gold prices are likely to be driven almost exclusively by the movements in the dollar, of which many people are bullish. The dollar index remains above 95. There's been some movement down against the yen and some of the other currencies, but really only when you get trade tariff announcements. Short any sort of headlines that damage the dollar is likely to be going higher versus the other majors due to the interest rate differentials, which continue to seem to want to separate given the Fed's path, given the stable path of the ECB, the non-rate hike path of the ECB, and the BOJ may be floating their JGB rates a little bit, but not really moving on rates and not really moving on the currency itself. So it is likely that the dollar index at least remains stable, if not rallies higher, and that's likely to send gold lower over time. But right now, gold not dead yet. This is Bob Iaccino talking about a slightly up day in gold from the CME Group trading floor in Chicago.